What if I told you that there's a stock that is similar to Meta platforms? And what if I told you that you could buy this stock before it reverses and rally just like what we saw with Meta platforms over the last few quarters? And what if I told you that this stock is PayPal? You might be asking, what does PayPal have anything to do with Meta platforms, social media, or the metaverse? Well, if you keep watching this video, you'll begin to understand why both of these companies have so much in common. My name is Redo and this channel is all about finding the companies of tomorrow, and in today's video, we'll be covering PayPal. We'll talk about its financials, valuation, why I think PayPal stock is so similar to Meta stock, what I'm doing with the stock, and more. And with that said, let's take a look at PayPal stock. PayPal was initially created by a company known as Confinity, which was founded in 1998 by Peter Thiel, Max Levchin, Luke Nosek, Ken Howery, and Yu Pan. In the year 2000, Confinity merged with X.com, which was founded by Elon Musk, and eventually the merged company adopted the name PayPal, which aims to enable people to send payments through email. The company grew in popularity, especially for sellers and buyers in the rising online marketplace eBay, where PayPal provided a much safer, easier, and faster payment method. As a result of the success, eBay acquired PayPal in 2002. Over the next decade, PayPal has grown into more than just an email payment company, and management and investors saw a much bigger potential for PayPal. As such, eBay spun off PayPal in 2015, which is when PayPal began trading independently in the Nasdaq. So in a nutshell, PayPal is the leading digital payment solution company, offering a variety of financial services and money management tools for consumers and merchants worldwide. So here you can see PayPal's entire suite of payment solution, which it has built slowly over the last 2 decades. I won't go through all of them, but I'll just mention a few of the key brands in PayPal's portfolio. So there's Venmo, which is a digital wallet and peer-to-peer payment platform, which was actually acquired by Braintree in 2012. So Braintree is a full-stack payments processing platform for merchants to accept payments in their app or website. And in 2013, PayPal acquired both Braintree and Venmo, which in hindsight were very important additions to PayPal's product line. Then there's the core PayPal app, which offers a variety of products and services for consumers, including storing, sending, and receiving money, make purchases at a merchant's online or offline store that supports PayPal, and even buy, hold, and sell crypto. And ultimately, PayPal wants to create a super app for consumers to manage their finances in a single app. So that's for consumers. On the other side, PayPal's simple and easy to integrate solutions enable merchants to quickly deploy digital checkout. And as you can see, when merchants offer PayPal as a payment option, there's a higher likelihood of purchase consideration, sales conversion, and brand loyalty. Not only that, but PayPal enables merchants to accept all types of payment options, including PayPal branded checkout like PayPal and Venmo, as well as unbranded checkout methods like individual credit and debit cards, and even digital wallets like Apple Pay and Google Pay. But more importantly, PayPal enables merchants to gain access to PayPal's network of 400 million users worldwide, and this is done through PayPal's two-sided platform, which bypasses the card networks like MasterCard and Visa. So as you can see from this chart, there's a lot of players that are involved in the traditional debit and credit card networks, which involves higher fees. On the other hand, closed-loop balance-funded transactions using a digital wallet like PayPal eliminates the need for the card networks, which capture more value per transaction and can share the savings with merchants and consumers. So many people think that PayPal is just a digital wallet, when in fact PayPal is a digital wallet that eliminates the middlemen like banks and the card networks, which offers more value in terms of cost savings, in terms of data, and in terms of efficiency. So that is PayPal's ultimate value proposition for merchants and consumers, which is to provide a two-sided payments platform. Now turning to moats. Based on my research and analysis, I identified 3 competitive moats for PayPal. The first one being scale. So PayPal is probably the largest fintech player and digital wallet provider in the world today. The company processed $1.4 trillion in total payment volume in 2022 across more than 200 plus markets and 100 plus currencies around the world. So it's safe to say that PayPal is virtually at every corner of the world. In addition, PayPal's industry-leading digital wallet is accepted among 79% of the largest retailers across North America and Europe, and competitors such as Apple Pay, Google Pay, and Shop Pay do not even come close. And PayPal even gained market share in 2022, increasing by by 3 percentage points over 2021. So in short, PayPal is the most widely accepted digital wallet in the market today. Its massive scale also means that PayPal has strong network effects moats. Again, PayPal operates a two-sided payments network, which is far more consumer and merchant friendly than the traditional card network. Couple that with PayPal's network of 433 million active accounts, including 35 million merchant accounts, we can see powerful network effects if everyday consumers and merchants understand the true benefit of a two-sided payments network. Its partnership base is also large and growing, and as PayPal forms more partnerships and rolls out more products and services in its platform, the company will enjoy powerful network effects as a result of its scale. And last but not least, PayPal also has a strong brand moat. So PayPal pioneered the digital wallet and online payments revolution, and it has been in the game for 20 plus years and has grown to be the most trusted fintech brand in the world. Consumers and merchants trust PayPal given its industry experience and global scale. In addition, the company holds well-recognized brands such as Venmo, Honey, and Happy Returns, and the PayPal brand is so powerful that PayPal customers are 2.8 times more likely to convert where PayPal is visible, and merchant net promoter score increases by an average of 8 points when shoppers pay with PayPal. And the brand is getting stronger each day, as mentioned by the CEO during the Q1 earnings call. Its net promoter score is at a 5-year high in Q1. Now that we've gone through what the company does, let's look at PayPal's financials. Revenue in 2022 was $27.5 billion, which is up 8% year over year or 12% year over year excluding eBay. On the other hand, revenue in Q1 was $7 billion, which is up 9% year over year, and this is a slight beat on analyst estimates. Revenue growth was primarily due to the growth in total payment volume or TPV, which we'll dive deeper later. As you can see, revenue growth slowed down significantly, peaking at 31% in Q1 of 2021, and since then, growth has decelerated to just single digits as the company faces tough year-over-year comps, slowing e-commerce growth and a challenging macroeconomic backdrop. This deceleration is a recurring theme for all the growth metrics that we'll be discussing today, but just be aware that this is not unique to PayPal. In fact, most growth stocks are experiencing rapid slowdown after growth has been pulled forward due to the pandemic. That said, let's look at the different drivers of revenue growth. So transaction revenue make up the bulk of PayPal's revenue as the company charges a fee for each transaction PayPal processes. As of Q1, transaction revenue was 90% of total revenue. In 2022, transaction revenue was $25.2 billion, which is up 8% year over year, and in Q1, transaction revenue was $6.4 billion, which is up 6% year over year. Growth was primarily due to the growth of Braintree, Venmo, an increase in TPV and the number of transactions, partially offset by lower revenue from core PayPal products and services and eBay. So as mentioned, the growth of transaction revenue was due to the growth of TPV, which was $1.4 trillion in 2022, which is up 9% year over year or 11% year over year excluding eBay. In Q1, TPV was $355 billion, which is up 10% year over year, and as you can see, TPV growth re-accelerated in Q1, which is a big positive for the company, and this is due to a 6.5% year over year growth in branded checkout, a 30% year over year growth in unbranded checkout, which is phenomenal, and a 9% growth in Venmo transactions. But on the other side, you may have noticed that TPV growth of 10% actually outpaced transaction revenue growth of just 6% in Q1, and this is due to the massive growth of 30% for unbranded checkouts, which typically have lower take rates than branded checkouts. And as you can see, PayPal's take rate has been falling over the last few quarters, again due to lower eBay volumes, which has higher take rates, as well as higher unbranded processing volumes, or Braintree, which has lower take rates. So here you can see the difference in take rates for branded and unbranded processing, with PayPal branded transactions like PayPal, Pay Later, and Venmo charging a fee of 3.49% plus 49 cents per transactions, while unbranded transactions only cost 2.59% plus 49 cents per transaction. So as unbranded processing volume outpaces branded processing volume, take rates and margins naturally take a hit. That said, let's move on with Venmo's financials. In 2022, Venmo processed $245 billion in TPV, which is up 7% year over year on top of 44% growth in 2021. So again, the sudden deceleration in growth is expected as the company grows over a larger base and faces tough year over year comps. In Q1, Venmo TPV was $63 billion, which is up 9% year over year and a re-acceleration from the 3% growth in Q4. During the earnings call, management also mentioned that revenue from Venmo was growing double digits, so that is a positive for the company. On a side note, PayPal's Buy Now Pay Later segment is still growing rapidly, with Buy Now Pay Later TPV at $20.3 billion in 2022, which is up 160% year over year with 25 million active customers. For context, Affirm's trailing 12-month TPV was about $19 billion with 16 million active customers, so PayPal's number is stronger in the Buy Now Pay Later category. During the earnings call, management also highlighted that PayPal's Buy Now Pay Later TPV in Q1 was about $6 billion, growing at 70% on a currency-neutral basis. Management also mentioned that PayPal's Buy Now Pay Later has the highest authorization rates and lowest loss rates in the industry. So these comments from management reflect strong momentum in PayPal's Buy Now Pay Later business, which is great to hear. I also want to point out that TPV growth and revenue growth have been lagging due to the international segment dragging down the entire business. As you can see, US TPV and US revenue are still growing at double digits, while international TPV and international revenue are only growing by single digits and even went negative in some quarters last year. So the strength in the US market is good to see, as the US is the most important market, but of course it will be nice to see the international market catch up with the rest of the business and return to growth mode. Turning to engagement, active accounts growth seems to be plateauing, as you can see right here, which is up only 1% year over year in Q1. On a quarter to quarter basis though, PayPal lost about 1.5 million active accounts, which is probably the first sequential decline in PayPal's history. I think it was back in early 2021 when management laid out an ambitious plan to grow active accounts to 750 million accounts by 2025. However, management abandoned that goal as they are seeing a significant slowdown in account growth. As you can see, accounts grew by 20% plus in 2020 but has pretty much lost its momentum, which is probably why management is now focusing on driving engagement now instead of account growth. The reasoning behind this is due to the fact that management sees little ROI from less engaged customers. So management's priority will be improving the number of payment transactions and transactions per account, and as you can see, these two metrics have been growing very nicely. So in Q1, the number of transactions grew 13% to 5.8 billion, and transactions per account also grew by 13% to 53.1 transactions per account. So despite the slight drop in active accounts, the robust growth in these two metrics show that PayPal is retaining higher quality customers, and these customers are transacting more and more within PayPal's platform, which is really great to see. Moving on, revenues from other value-added services, which makes up roughly 10% of revenue, was $2.3 billion in 2022, which is up 17%, and in Q1 it was $606 million, which is up 39% year over year. The strong growth in this segment and the acceleration that you see in the last few quarters was due to an increase in interest earned on customer balances and credit as a result of higher interest rates. With that said, the greatest concerns for PayPal are that the company's growth is slowing down and that the company seems to be losing market share to competitors, as seen by the sequential decline in active accounts. However, the most important metric to look at, in my opinion, is TPV. As long as TPV grows, more dollars can be converted into revenue for PayPal, and as we can see in Q1, TPV grew by 10%, which shows that the company is still growing. In addition, PayPal processed more transactions and transactions per account, which shows high engagement within the platform, which is really great to see. Whatever it is, I think PayPal's growth story is far from over. The biggest tailwind for PayPal by far is the increasing adoption of digital wallets, and as shown in this chart by ARK Invest, digital wallets are gaining market share in both online and offline transactions. In 2021, digital wallets facilitated 49% of e-commerce transactions, up from 18% in 2016, while traditional payment methods like cash and credit cards are losing market share. We see the same thing for offline transactions, where digital wallets facilitated 29% of offline transactions, nearly double the 16% in 2018. In both cases, digital wallets are now the most common form of payment method, and it's increasing with each passing day. I believe this trend is likely to persist, and this should be a major tailwind for digital wallets like PayPal. It is also worth mentioning that PayPal also still have room to take market share in core markets such as US and parts of Europe, and increase digital wallet adoption and the growth growth of sectors like e-commerce and buy now pay later should also support PayPal's growth. Besides, global network card brands in the US processed more than $9.6 trillion in payment volume in 2022, while PayPal only processed $881 billion worth of TPV in the US in 2022. So that puts PayPal's market share at about 9.2%. So I think there's still a long growth runway ahead for PayPal. This is part 1 of a 2-part video, and in the second part, I talk more about PayPal's valuation and its price action. So if you're interested in watching part 2, you can click this video right here, or you can find the link to part 2 in the description down below. Also, if you find value in this video, I would appreciate it if you hit the like button and subscribe to my channel for more investment content. Thank you, and I'll see you guys in part 2.